VA loan assumptions are everywhere right now. TikTok, it's going to say that they're the secret hack to beat high interest rates. Real estate gurus, they're going to call them the deal of the decade. And your buddy who just PCS'd probably sent you a listing with assumable VA loan in the title. But here's what no one is telling you. Earlier this year, I had a client bring me over $200,000 to close on a home that was $700,000, and it was an assumable loan. It took 60 days instead of the usual 30 days. And then halfway through, the sellers, they almost backed out because they felt progress was too slow. But it ended up paying off for the sellers and the buyers, but it took a solid contract up front to make sure that there were gates and milestones that people were meeting in order to give each party confidence to continue to move forward. What was the payoff? The sellers got what they wanted in terms of the price, and the buyers, they stuck with it, and now they are paying $2,000 a month for around a $500,000 mortgage in 2025. Everyone else that has a $500,000 mortgage, they're paying around $3,500 for the same loan at the current rates. So yeah, the assumptions, they can save you serious money, but they're also a little more complex than social media makes them sound. And today I'm going to break down exactly what the VA loan assumptions are, why they're blowing up right now, and then what the actual cost is and who should pursue them. And of course, the three things that kill almost every VA loan assumption deal before they close. Let's get into it. First, let's make sure we're on the same page about what an assumption actually is. A VA loan assumption means that you are taking over someone else's existing VA loan instead of getting a brand new mortgage for that home. The original loan, it stays in place. Same interest rate, same remaining balance, same terms. You just step into the borrower's shoes and start making those payments. Now let that sink in. Here's why that matters right now. Back in 2020 and 2021, interest rates were 2.5% to 3.5%. Today, we're sitting at 6 to 7% depending on your credit and down payments. If you can assume someone else's 2.5% loan from 2021, you're saving 3.5 to 4.5 percentage points compared to a new loan today. On a $400,000 home, that's about $900 a month in savings, serious cash. So over 30 years though, that's $324,000. That's not a typo. I'm not misstating this. It is real cash staying in your pocket just by taking over someone else's low rate loan. Now, here's the catch that nobody talks about on social media. It's called the gap. Let's just say that a house listed at $700,000, it has an assumable VA loan. That sounds great, but the remaining loan balance is $450,000. That means there's a $250,000 gap between what the seller wants for the house and then what you're assuming. You have to bring that gap in cash. Well, you don't have to, but the math doesn't work otherwise. All of it at closing. Think about that. $250,000 cash, not finance, not rolled into the loan, cash. This is the single biggest reason most assumptions don't work. People see the low interest rate, they get excited, and then they realize they don't have $100,000 to $250,000 sitting in their checking account. Now, you might be thinking, can I just get a second mortgage to cover the gap? Technically, yes, but there's where the math that I was mentioning earlier, where that kills that idea. A second mortgage right now, that's running 8 to 10% interest because it's a riskier loan for the lender, whoever gives that money to you. So you'd be borrowing $250,000 at 9% to save money on the first loan at 2.5%. Now, when you do the math, $250,000 at 9% is about $1,900 a month for the second mortgage. Add that to your assumed first mortgage payment of maybe $2,500, and you're at $4,400 a month total. Meanwhile, if you just got a brand new $700,000 loan at 6.5%, your payment would be $4,420 a month. So you'd save maybe $100 a month. For all that extra complexity and the risk of juggling two loans, probably not worth it for most people. This is why I tell clients, if you don't have the cash to cover the gap, an assumption probably doesn't make sense. It's not impossible, but the math rarely works when you factor in the second mortgage. Then you have the time problem. Okay, so let's say you've got the cash. Great. Now let's talk about time. A normal VA loan closes in about 30 days. An assumption, 60 to 90 days minimum. Here's why. The VA likely has to review and approve the assumption. The mortgage company that holds the loan has to process all your paperwork and qualify you just like you're getting a new loan. And here's the kicker. Once everything's submitted to the mortgage company's loan officer, they have 45 days to process it. Not 30, 45. But it is an accountability measure, so there's value in that. And during those 45 days, you're in the driver's seat as the buyer, but the sellers, they're getting nervous because assumptions, they take so long. Sellers start wondering, is this buyer actually going to make it to closing? Are they going to back out? Should we relist and just take a different offer altogether? And here's where it gets really tricky. As the buyer, you need to keep demonstrating progress to the sellers so they don't get cold feet and walk away. The mortgage company, they won't give your agent updates because of privacy rules. Their names are not on the loan. When you started this process, the sellers put your name on it, or they can put a designee as well. There are companies that do this. In this particular case, to save money on both sides, it was the buyer and seller party pushing to get it done. My client had to call the lender twice a week just to get status updates so we could report back to the sellers that things were moving forward. That's time and persistence that most buyers aren't prepared. Now, the trade-off is clear. You trade speed for savings. If you need to move fast, maybe you've got PCS orders and you need to close in 30 days, an assumption, it's probably not going to work for you. But if you've got time and patience, the savings can absolutely be worth it. So it begs the question, who should pursue an assumption? You're a good fit for an assumption if, one, you have at least $100,000 to $200,000 in cash available to cover the gap. Now, this is not a hard and fast rule by any stretch. There are plenty of people that have bought in 22 that have not gained any kind of equity. And so the gap may be much smaller than that. But what do I mean by available in your checking account? It should not be your emergency fund, in my opinion. And that's coming from a personal financial coach. Not money you need for actual other things. I'm talking about actual available cash. 2, you're planning to stay in the home for at least 5 years. The longer you stay, the more benefit that you're going to get from that low interest rate. And if you're flipping or planning to PCS again in 3 years, the hassle probably isn't worth it. 3, you understand that this thing is going to take 60 to 90 days, and you are okay with that. You're patient. You're willing to stay on top of the lender. You're not in a rush. And 4, you're comfortable with complexity. This isn't a straightforward transaction. There are more moving parts than anybody could ever realize. You need to be ready for that in terms of documentation and what it's going to take to actually get approved to take this loan on. Now, you are probably not a good fit if you don't have significant cash reserves, okay? If you're stretching to come up with the gap money, probably don't consider it. You need cash left over after closing for emergencies and repairs. This is home ownership. Remember that. Assumptions take time. If you need to close in 30 days, you have tight PCS orders or a quick timeline, you just want to sign papers and move in without dealing with the extra complexity, look at regular loans. The benefit of a low rate only compounds over time. So short-term ownership, it doesn't maximize the value, but it gives you the opportunity to keep it as a rental, and your cash flow position is probably better than it would be otherwise. The 3 deal killers of VA assumption loans. Number 1, first and foremost, is going to be communication. If you're not willing to be an open book and provide that communication to the agents to keep everybody on board, it's not going to work out. Deal killer number 2, the seller changes their minds. You're trying to do everything you can in step 1, which is to communicate. But remember, assumptions take time. Perhaps they've already bought another home, and halfway through, they just get nervous. The progress feels slow. They start wondering if they should just cancel the contract and again relist at a higher price, take a different offer, whatever it might be. But this is where having a good agent matters. You need someone who can keep the sellers informed, show that progress, keep everyone calm through the extended timeline. Deal killer number 3. The buyer doesn't qualify just because you're assuming someone else's loan. It doesn't mean you get to skip the qualification step. The lender still checks your credit, your income, your debt to income ratio, everything to make sure you can afford that loan. And here's the catch. Some buyers think, I'm assuming a lower payment, so it'll be easier to qualify. Not true. If your debt to income ratio doesn't work, you're not getting approved. This is why getting pre-approved before you start looking at assumptions is critical. Don't waste 60 days only to find out that you don't qualify. So let's say you've decided that you want to pursue an assumption. How do you actually find these properties? First, I recommend look for listings specifically that mention assumable VA loan or VA assumption in the title or description. Not all sellers advertise this, but the smart ones do because it's absolutely a selling point right now. Second, when you're working with an agent, tell them up front that you're interested in assumptions. Have them filter the searches within the MLS and that'll look for existing VA loans, or contact that listing agent directly to ask if the loan is assumable on that home that you saw. Third, check the original loan date. If a home was purchased or refinanced between 2020 and 2021, there's a good chance the loan is in the 2 to 3% range. Those are your best opportunities. But here's the thing. Not every VA loan is assumable. Some lenders, they have restrictions. Some loans do on sales clauses that require full payoff when the home sells. Before you fall in love with a property, have your agent contact the listing agent and verify 3 things. Write these down. Is the loan actually assumable? 2, what's the current interest rate and the remaining balance? And then 3, what's the gap between the remaining balance and the asking price? Those 3 answers will tell you immediately if the deal makes any sense at all. Let's do a recap. VA loan assumptions can save you hundreds of thousands of dollars over the life of your loan if you can lock in a 2 to 3% rate while everyone else is paying 6 to 7%. But they require significant cash to cover the gap between the loan balance and the purchase price that you actually agree on. They can take 60 to 90 days instead of the typical 30-day close, and they come with complexity that most buyers are not expecting or prepared to deal with. You're a good fit if you have the cash, the time, and the patience. You're not a good fit if you just want speed, simplicity, or just don't have any of the reserves. And the 3 deal killers to watch out for, again, communication, get the right agent on your side, and then the qualification issues. After going through all this, if you're still thinking, I want to explore this, but I need someone who actually knows how to navigate an assumption, click the link in the description and schedule 30 minutes on my calendar. No sales pitch. We'll just walk through your situation, run the numbers, and figure out if an assumption makes sense for you. Because here's the thing. I'm not going to tell you to pursue an assumption if it doesn't actually benefit you. My job is to drill down, get you the real answers, and guide you through the complexity so you don't get blindsided halfway through. I work with military families nationwide through my referral network. Colorado Springs is my home base, but if you're stationed elsewhere, I'll connect you with an agent who knows assumptions inside and out and has the same values and outlook that I do. The link to my calendar is in the caption below. You can call me, text me, whatever's easiest. But if you found this helpful, share it with another military family who's looking at assumptions. Click like and subscribe on the channel because we go over this kind of real estate content that cuts through the noise, gives you the answers, and is meant to help you be prepared to make confident decisions. Have a good one. See ya.